What's up, everybody? How are you? Brian Mayer here with the notorious Jeffrey S. Watson. You are watching this on a replay, or maybe you called in and you're listening to this. Unfortunately, for the last 15 minutes, I have been trying to get this to stream out to Facebook to my new business page, and it's not working. It says that the app was disabled as of today, April 10th, and I didn't disable it. So maybe it's a security thing with the problems that Zoom has been having with hackers. I don't know. If any of you are aware of how I can turn that back on, please let me know. Otherwise, I have a project over the weekend to figure that out. But anyway, we don't want to hold up this call. Guys, we have such incredible content for you. This message, this webinar, this content is for business owners, okay? And we're going to break all this down. There's many different types of business owners, small business owners to be more specific. You own a company, you own a restaurant, you have a staffing company like me. You're a real estate agent. You're a real estate investor. You're involved in network marketing. You're a sole proprietor. You're an LLC. You have an S Corp. You get a 1099. We're going to cover it, okay? We're going to cover it quick because I have the man with all the information, my partner in crime from many years ago, Jeff Watson. So, Jeff, first of all, good morning.
Good morning, Brian. Man, it's always fun to be with you. Always.
It's like we're putting the band back together, but we're not going to get back in the short sales, are we?
I am not stepping on that stage again in my life. I got bigger, better things to go this time around, man.
I hear you.
Yeah, I mean, my team is not going to be begging and pleading with loss mitigators. We're going to be telling banks what we're buying their paper from, and we're done with them.
So does that sound like you're going to actually become the bank, Jeff?
Oh yeah, oh yeah, okay. Oh yeah.
Right.
Once I learned and understood the power of buying the paper from the bank. Forget short sales, man. Okay. Yeah. Anyhow, dude, let's get into this. There's three things I want to cover. So make some notes so that I don't forget to cover these things. Okay. I want to cover PPP if you're a business owner with payroll.
Okay.
I want to cover PPP if you're a self-employed 1099 Schedule C. And then I want to cover the huge glaring weakness that the PPP program has identified in the way most entrepreneurs keep their books. And this is going to be very important. This is a time where they can learn from a bump and a bruise rather than a broken leg how to not get caught like this before again. Okay.
Okay. So I got those 3 points. And again, there's 8 topics, one of them being the PPP. Should we just jump in right there?
Yeah, let's do that because let's hit that because this one, I don't want to do the same thing I've done in every other call, dude. I really don't. I've done a dozen calls. I don't want to do the same thing because, dude, it's you. Okay.
Okay. All right.
We don't do things like everybody else does. Okay.
No, never did.
Never did. Never will. We're going to be us. Okay. So Go ahead. Hit me with your best shot.
All right, so the PPP, the Payroll Protection Program, a lot of confusion around this, as you mentioned. And again, I think that I can reference some personal situations in my life that might shed some light for other people. I, as you know, have numerous streams of income. I have a very complex situation when it comes to income streams and taxes, et cetera. Let's start at the beginning. I own a company called TechLink Solutions, Inc. It is an IT, as an information technology staffing firm. I have one W-2 employee, and I have 2 subcontractors, I guess you could call them. I won't call them employee. I know better with you on the phone or on the webinar. But they're 1099s, but they are part of my payroll. I have to pay them every 2 weeks. I then invoice my client. I get reimbursed. So question, with the PPP, I have a blend here. When I fill out the information, and we'll get into the details that you have to go to your local bank, but I do include all 3 of them, correct?
No, you don't.
So I'm already wrong, and we just got started. Great. There you go.
Brian, here's the problem. You read the law as Congress passed it and Trump signed it 2 weeks ago today. You didn't read the Treasury regulations that came out a week ago that modified how they interpret what the law says.
Ah, okay.
Okay. So
dude,
Brian,
that's a shock. Literally, I didn't know that.
Yeah, it's amazing, isn't it? I mean, bureaucrats say it doesn't mean what it says it means. Oh, come on now, Okay. So here's what it is. With your staffing company, you can only apply for a PPP loan based upon your W-2 payroll.
Wow. Okay.
You have to go tell those 1099 individuals, yo, y'all got to go apply on your own.
Okay.
Okay. And we'll talk about what they got to do in the next segment that I want to cover. But here's the first thing. I understand how the statute reads for payroll cost. Okay. I read it. My buddy John Heyer read it. A couple of my other friends read it. We all got together and said, yeah, we all read it the same way. Treasury reads it a completely different way. I'm going to be talking pretty soon with a good friend of mine. She works on Capitol Hill, and she's going to explain to me, because I haven't had a chance to ask her except text messaging, why did Treasury do this, okay? So I get to chat with her tomorrow about this, all right?
Okay.
But Treasury did it. And so now all you can do, and this is the part that's cute, even though Treasury says you can only apply based on your company's W-2 payroll, some banks are letting you use both. Okay.
So do I roll the dice and just include it and see what happens?
If you're not in a hurry for the money, yeah. Because I'm going to tell you this, if you have not already applied, you're going to be in a really long line. Okay. And if the Democrats stop obstructing the additional $250 billion that the Senate wants to put through, we'll be good. We'll have enough money. All right.
Okay.
So let's just talk about the magnitude. Forgive me, folks, as I break the coronavirus rules and I put my fingers to my face. Okay. Sorry about that, folks. But hey, my eye was itching. Let's just talk about this. The normal, typical annualized budget for the Small Business Administration for 7A small business loans distributed by thousands of SBA lenders across America is $30 billion. Okay. 2 weeks ago, Congress passed this bill called the CARES Act that took that $30 billion and 11 plus X'd it from 30 to 349 billion, from down here to way up here. Okay. And now, within 2 weeks, Senator Rubio, Senator Scott, Senator McConnell, and a few other guys have all said, whoa, based on how fast this money's leaving, based on how many people are applying, we need another 250 billion. But your good friend, the distinguished senator from the state of New York, I'm being sarcastic about being your good friend, right. Senator Schumer, and my dear friend, the Speaker of the House, Ms. Pelosi from California, being a little sarcastic about her being my dear friend, have said, nope, we want other things included.
So they're back to that.
Well, we're back to that. We're back to political horse trading. So America is going to burn and politicians are going to fiddle. Anyhow, so here, that's the big thing. Now, getting away from political commentary, because, you know, I don't want to offend everybody, but if you give me a chance, I will.
Right. Well, here's the thing, though. Democrat or Republican, independent, non-political, we're talking to small business owners. And if there's two people that you just mentioned, regardless of your political affiliation, they're screwing you right now.
Their agenda is screwing small businesses.
Okay.
That
we can agree upon.
So here's the next thing I want to talk about. Okay. Self-employed individuals. Today is April 10th. Today was the day that self-employed individuals, y'all with 1099s, y'all that file on Schedule Cs, today is the day that you could first apply. I don't know how many banks are going to be able to accept your application. My bank is already shut down. They won't take any more applications. Okay. They shut down 3 days ago.
A big bank or a national bank or smaller?
Regional bank, Huntington Bank.
Okay.
Offices from Pennsylvania to who knows where, all over. Okay. They've shut down. They're not taking any more applications. The smaller community banks are where you need to be looking. This is important information. If you're a small business owner now is the time to go open up a business bank account at a local community bank.
Or a credit union, Jeff?
Or a credit union.
Okay.
Community banks and credit unions will greatly appreciate your deposit. Okay? So in my practice, my business, I keep a sizable sum of money on deposit. Okay? I have to. If I could move that to a local community bank, they would be very happy with me.
You're talking about it, just to clarify, opening up a business checking account.
Business checking account, business money market account, business savings account. And I'm going to talk about why you need a business savings account in a little bit, okay?
Mm-hmm.
You don't need it for this program, but you need it for other better reasons. So if you can move to a local community bank and create the relationship there, you may still be able to use them to do your SBA 7A PPP loan, okay? And you may have better luck there, all right? And if I don't hear anything from Huntington in another 7 days, that'll be 10 days since they closed the window. If I don't hear anything from them, I'm going to go to my friend who's the chairman of the board of a community bank, and I'm going to go, dude, I only got a personal account with your institution, but I want to move a business account there if you think you can accommodate me. Okay?
I'm sure they'll be more than happy to accommodate you, Jeff.
I don't know. I can't, but he lives in the same world that I live in. You can't use personal relationships for your advantage. Okay. Yeah. I sit on the board of directors of a regulated financial institution in the state of Texas. I can't use that relationship for anything. In fact, it prevents me from doing stuff there. Okay. Mm-hmm. But that's life.
Okay.
So let me get the third thing I asked you to write down, and then we'll take your questions. Okay.
Yep.
This whole payroll protection program loan thing, this whole EIDL loan, and those are radically different programs, we'll get into why, has exposed a huge problem that most entrepreneurs don't understand. You can be an entrepreneur and you can have a team of 3 like I do. You can be an entrepreneur and you can have a team of 1,000 like one of my mentors does, okay? You can be an entrepreneur and you can have a team of just yourself. All right. I mean, one time I had a team of 5. Now I'm down to 3. Okay. One girl got too busy, faded out. Another girl retired. Another lady retired. We're all good. Okay. But I'm down to 3 and it's great. But the thing you've got to understand as an entrepreneur, whether you're a 1 person, a 3 person, a 10 person, 100 person, 1,000 person company, you must have reserves. You must have reserves. Do not write checks out of your QuickBooks account that turns the numbers red and not mail the checks until you make deposits. That is not a way to run your business. The way to run your business is as revenue comes in, designate some of that revenue to go into your business savings account. At my office, we peel off 5%. When a check shows up, we peel off 5% to go into savings. And let me tell you something, Brian, I don't want to brag, but I don't have to earn another dime for a couple more months and we'll be just fine.
You mean making payroll, running your operations? Right.
I can run everything just fine. Okay. So I'm carrying a 3-month to 4-month cushion. Okay. Ideally, folks, if you can carry a 3-month cushion on your business, what does it cost to pay your rent, pay your electricity, pay your phone bills, do your marketing, cover payroll, etc.? What do you go for health? All the stuff you got to pay out of your business. Okay. You need to have a cash cushion of 3 months. You're not going to get there overnight, but you can get there. You've got to plan on it. You've got to do it, because when you do it, you are going to then make business decisions from a place of peace, confidence, and strength. Now, Brian, buddy, you and I both know that when you're a leader, as you and I both are, and you make decisions from a place of peace, confidence, and strength, you make a better decision, don't you?
Absolutely. Yep.
I mean, this came to me yesterday. I realized why I was so exhausted after interview, after interview, after phone call, after phone call, after client, after tech, all this, I realized that I had been absorbing all of the fear, all of the worry, all of that negative crud that people who had refused to listen to me for years were now trying to project onto me, going, you got to figure out a way how I can get money out of this program right away. And I'm like, whoa, you didn't do what I told you to do 2 years ago. You didn't do what I told you to do a year ago. You didn't do what I told you to do beginning of this year. Now I got to fix what you didn't do.
But you know, the reality is, Jeff, and I hate to say it, I think it's safe to say most small businesses out there, they do operate hand to mouth, week to week, right?
That's why most small businesses don't succeed over 5 years.
Yeah.
So you've got to set back and say, okay, what do I have to earn on my product, on my service, on my deliverable? What margin do I have to make to pay me, to pay my team, to cover my rent, to cover my cost of goods sold? You got to calculate all that out. And you as the business owner get to do that.
Mm-hmm. Yeah. Well, hopefully this will be a lesson. And I know, thanks to your advice years ago, I pretty much am set up that way. Not on all my entities, which we'll get into here in a bit.
Dude, you were an absolute freak show years ago.
You remember?
But today, man, you went from being that wild-eyed, crazy man that was a total business mess to somebody that I almost have got in a button-down collared shirt, wearing a good suit, looking sharp. I mean, I almost got you there. You were
telling you.
close.
It only, 2008? It only took 12 years, Jeff. You know, so, but okay,
dude,
so
we're all a work in progress. We are all a work in progress. So every business owner, every entrepreneur, because dude, we're talking to entrepreneurs. Okay, that's who my heart goes out to. Small business owners. I mean, small business owners generate 68% of the gross domestic product in the United States of America. Okay,
yep, absolutely.
The adage used to be, as General Motors goes, so goes America. Not anymore. Baloney. As small business goes, so goes America.
Yep.
Okay?
Absolutely. Man.
And so if Starbucks is filled with people on their laptops working their own little side hustle, their startup business and so on, America is good. Okay? If Panera is empty and Starbucks is empty, and all the other, and Chick-fil-A is empty with all that stuff, we got a problem. People aren't hustling, they aren't grinding, they aren't making money. Okay. Now, here's what scares me. There's a lot of people who go into business and say, hey, I'm going to do this to see if it works. No, I'm going to do this because it will work or I will die trying.
Exactly.
Okay. I got no other choice. I mean, will Brian make it was one of the most
remember that
watched docudramas that I've ever seen that was so legit, talking about the ups and the downs of your life going from the corporate space into the sole proprietor space.
Yep.
So let me make this last comment, okay? And then, Brian, you can ask questions.
Okay.
I'm talking to every small business owner, entrepreneur, and so on, okay? Particularly my heart goes out to real estate investors because, man, I have bled with y'all for 27 years as a real estate investor. I got scars on my body. I got scars in my body. I got damage in my lungs. I got gray hair and missing hair because of real estate, okay? Do not become a full-time real estate investor until your real estate income consistently replaces your full-time other employment income. I have watched, and we're going to see it again. There were way too many people in the last 12 months who got into real estate investing. They flipped a deal. They wholesaled a house. And they said, man, I'm going to go do this full-time. Sorry, you blew it. You've got to build that foundation and that other aspect. Okay. Yeah. You've got to do it. I have always been a full-time attorney and a part-time real estate investor. Why? Because my real estate income never could meet what my attorney income could meet.
Because you charge too much per hour.
Because I'm good at what I do.
Exactly. I got you. Great point. All right, so I do, and I know, the PPP is a really big one because from what I read and saw in one of your prior webinars, this is the first time in history that the government, and again, maybe this changed too, said, okay, you're a sole proprietor, you're a 1099, you're a real estate agent. Sure, you could apply too. Now it gets into
that was the first time ever they did that. They also made this program available to churches and pastors who are self-employed. First time ever they've done that.
Okay, so here's a situation. A lot of people, as you know, they'll go out and just form an LLC, right? They heard it was for their tax reasons. They whatever. Go to one of these websites. $100 later, they have an LLC. Some of them
have an LLC because if they don't have a signed operating agreement, they don't have an LLC. But keep going.
Okay, correct. And I think that's kind of where I was at when we first met all those years ago.
Dude, we were right about there. Yes.
Yeah.
Yes.
Now, a lot of people suggest and have done a subchapter S election. Okay. With that comes the requirement to have a reasonable salary, as in W-2, 941s, etc.
Would you say that again, Brian? Because there's so many people who haven't heard that, and that is so true. Say it again.
Well, I learned this from somebody who I won't name, but when you have an LLC with a subchapter S election, it is not a suggestion; it is a requirement that you pay yourself as the business owner a reasonable salary. Okay, on a W-2, which means 941, etc.
Right. If you didn't learn that from me, you learned that from our good friend John Heyer.
No, it was you, man. And when you cleaned up all my books years ago. So I did the sub selection. There are people who also did that, Jeff, but they never paid themselves a salary. Now, we know that's wrong, but as it applies to the PPP, does that kick them out of the program?
Yes, they screwed themselves.
Okay.
They screwed themselves.
Okay.
They didn't follow the advice that they should have been given by their accountant, the advice that they should have been given by their attorney. They didn't do it. They didn't understand what they were required to do. They're screwed.
Got it. And this is if you're a straight up S Corp or an LLC with an S Corp election. Doesn't matter. You need the salary. If you didn't do it, you're screwed. Now,
if you didn't pay yourself a reasonable salary, you don't have a W-2, you didn't do a 941, you don't have payroll.
Well, here is something I heard, and I want to see if this is true. If someone finds himself in that situation, we just finished Q1. What if they, as the business owner, were to stroke themselves a check for the quarter? The taxes are not due for, I believe, another 5 to 6 days, and pay the payroll taxes, and now show they were, in fact, for Q1 of this year on a W-2. Is that, number one, doing the right thing, because it sounds like it is, and then maintain that payroll? But now could they be eligible for that?
Yes, and the CARES Act actually gives them a benefit for doing that. It gives them extra time to cover that payroll cost and submit that payroll tax. So they
this
get
is the time for people to do the right thing and draw a line and actually do the right thing legally.
Yep. And if they're capable of doing that, they can go all the way up to paying themselves at the equivalent of $8,000 a month for January, February, and March. Okay? $8,333.33 would be the max number I would say that they could go up to. Okay?
And that, just so people understand, is because it caps out at the first 100,000 year in earnings, right?
Right. So if you got an extra 25 G's sitting around in your business, in a savings account, something that you can get a hold of, and you can put it into your business as an owner's capital contribution, and then take it out as a payroll to yourself. And
pay the taxes on it.
Pardon me?
Pay the taxes on it.
You're going to lose the taxes on it, but you get your money back.
Yep.
But now you've got the paperwork to go show, hey, I was in business from here to here. This is what my payroll is.
Got it. So it's a chance of redemption and also to participate in the PPP.
Correct.
Okay.
Yes, you can get two birds with one stone that way. You can clean up your sins. You can stop sinning going forward, and you can make it, and you have a chance at a decent PPP loan, provided you need it. Yes.
Okay, that is awesome, and I think that a lot of people are going to be happy to hear that.
Now let me give you
They need some cash.
let me give you the parallel trick to that, okay?
Okay.
Unless you're probably going to ask me about this. So you might have been saying, so Jeff, I have an LLC. I didn't elect sub S. It sounds like that was the right choice.
That was next. Yeah.
What can I do now? I haven't filed my 2019 taxes yet. Good. You now can sit down with your tax professional and really look at your Schedule C to make sure that line 31 on your 2019 Schedule C has a good number on it. How do I define what a good number is? Okay, we're going to do some algebra backwards. We're going to have two unknowns on our equation. The last unknown number is, what do you think you could reasonably use in the size of a PPP loan? Okay. Then we're going right to left. If we still have our 2019 Schedule C as a blank line on line 31, here's what we can do. What do we want for a PPP loan? Let's just put down $25,000 here, okay? We move one space to the left, we've got 2.5 is the multiplier. So to get to 25,000, we're multiplying something by 25, 2.5 to get there. We want 10,000 here. 10,000 times 2.5 gives me the 25,000. To get to the 10,000, I got to get to that number by dividing something else by 12. So if I have 120,000 on line 31 of my Schedule C,
what is line 31?
I have $120,000 subject to self-employment tax. I won't pay self-employment tax on all of it, but that's my payroll number for my PPP program, figuring out my average monthly payroll cost to get a $25,000 loan.
Okay, pause. You just put a lot of information out there. I'm sure you lost a lot of people. So let me try and decode this. We are, first of all, speaking to 1099s, sole proprietors, and LLCs without a subchapter S election. Okay.
Everybody like that's going to be filing their taxes on a personal return with a Schedule C included.
Got it. Now, what is line 31 specifically?
Line 31 is the amount of income that you earned as a self-employed individual that is subject to self-employment tax. It's what you paid yourself for working.
Now, here's the thing. You mentioned 120,000 as a round number throughout the year, divide by 10. Is that pre-expenses?
That would be after expenses.
That's your net, basically.
That would be your net, yes.
Okay. Now, normally you want that number to be obviously as small as possible.
It depends on what you're trying to do.
Okay.
That number needs to be, in my opinion, if you're doing that, that number needs to be a minimum of $7,000 so that you at a minimum qualify for 4 quarters of Social Security.
7,000 for the month?
For the year.
Oh, for the year. Okay.
For the year. Now, I've worked with some people who are Schedule C self-employed 1099 cats, and they make close to 7 figures.
Mm-hmm.
I had one client that set up an LLC, didn't elect sub S tax status, was the sole owner of the LLC, had the audacity to go out and gross $3 million in 1 year.
Mm-hmm.
Put it on the top line in his Schedule C. When he filed the return, you know what happened, don't you?
Nothing on 31?
All the alarm bells inside the IRS went off going, we must audit this return. We must audit this return. $3 million by one man in 1 year is auditable.
Mm-hmm. Question is, how much ended up on line 31?
I don't know how much ended up on line 31. I didn't handle the audit, okay? I had to fix the entity after because he'd screwed it up, and I had to fix it afterwards. But anyhow.
Now, hold on. Now, let's use that number. And again, I want to make sure I'm following you here. You said 7,000 for the year, Jeff.
Right.
But if you divide that by 12.
You got nothing for a PPP loan.
And multiply it by 2.5, that's nothing. It's $1,400. You're better off on unemployment, which we're going to get to.
Right. Well, you're better off on unemployment. But what
Okay.
what I was doing there, Brian, is I was on a bunny trail. I was talking about, just generally speaking, exclude the CARES Act. If
Mhm.
you're self-employed and you got a little side hustle and you're putting it on a Schedule C, you want to report at least $7,000 of net income subject to self-employment tax, so that you earn a minimum of the 4 quarters of Social Security for that year.
And what is the reason for that? To be audit proof?
No, not to be audit proofed, so that you continue to build your Social Security retirement, so that you make yourself eligible for Social Security, disability, and things like that.
Okay. Got it.
Okay.
Question. If somebody, obviously now we have this extension, so for the filing of your taxes, we have an additional 3 months. We have till July 15th. A lot of self-employed people, as you know, would have gone on an extension regardless. So they just got another 3 months. But the point is, can you use your figures if you didn't file yet from 2018 for this group of people?
No.
You can't, really.
The
Okay.
statute specifically says that they look at what your earnings were from March 30th of 2020 back to January 1st of 2019. And they will then take the 12 months that you last reported and
Mhm.
divide that by 12, multiply that times 2.5.
So it's technically April of 19 through March of 20.
Correct.
Got it. Okay.
If you were in business for that whole time, yes.
Now, when you say submit this data from your Schedule C, you can submit that even if it hasn't been filed yet, right?
I would not. I would make sure I file my return and use from the signed return by you and your preparer that this is what I did. Or if I did it online through my own program or whatever, I'd make sure I have a copy showing I submitted it, and that's how I did it.
Is that, and actually when I announced we were going to do this webinar, I got quite a few questions sent in, which is actually what this is. And I tried to group them, and what question came in the most. And one of them was that if we're given a 3-month extension, is it a requirement that you file, or can you just take the data from your accountant, line 31 of your Schedule C?
You could try to just take your 1099s,
Mm-hmm.
because that's an independent provided information. You've got to use stuff that you can prove is accurate. Okay. So banks, in this case, the statute says that banks can look at 1099s. They can look at bank records. They can look at bank statements. They can look at other things. They can ask to see your QuickBooks account and so on. But I'm suggesting that you always show up with stuff that you can prove under penalty of perjury is dead frickin' accurate.
Okay. Now, this is
Okay.
where I want to drill down one more level, and we'll be done, I think, with this PPP. From what I understand, it wasn't just payroll. It was also mortgage or rent. It was utilities. It was debt service. How does a self-employed person, you ready for it, working from a home office, taking a home office deduction, include those figures if they can, or is that not an option? That's a good one. That's a good one, right?
That's a really good question. So I would go back and I would say, what did I do on my 2018 and 2019 tax returns regarding my home office deduction? How much did I deduct for utilities? How much did I deduct for mortgage interest? How much did I deduct for rent? Whatever it was I put on my Schedule C in 18 and 19 for my home office expense. Take that number, divide it by 12 so that I know what my monthly was, and say, okay, so if I spend that for 2 months if I spend PPP money for 2 months on that amount, I should still be okay. That's my theory. Okay. Because remember, Brian, we're talking about a law that's only been in existence for 2 weeks.
Right. Right.
Okay.
And again, I don't think anybody asking these questions, and that one came in a lot, because as you know, in this society, I'm now the virtual entrepreneur, right? I would brand myself. People are working from home, even prior to the coronavirus. So people are taking legally advantage of a home office deduction. And if they're saying you can write off your office expense, your utilities, et cetera, well, obviously it's not the full thing for your house, but if you're taking, let's say 20%, you should be able to include that into your PPP calculation, right?
So let me drill down on this one, okay? So I want people to get the idea to do this accurately.
Mm-hmm.
One of my business partners works from home. So she measures the square footage of her entire house floor plan. She then measures the square footage of her office that is used exclusively for work. And the office is 8% of the entire space in the house. Okay? That means 8% of the mortgage interest, 8% of the utilities, 8% of taxes, real estate taxes, can be deducted on her Schedule C. Okay?
Okay.
Based on a square footage calculation. When you do that calculation, have it in print, pictures, diagrams, measurements, show the math. If you ever get audited by the IRS and you sit down with pictures showing, hey, this is what my home office looks like. Here's a floor plan of my house. Here's the dimensions. Here's the calculation. Their eyes are gonna roll back, and they're gonna know you got your shit nailed down tight.
Got it. Okay. Which is another cleanup item for people while we're at it, right? This crisis might actually end up end up running their books the right way. We'll see, right?
Yep. All right, I gotta let a buddy know that I can't talk to him right now.
Go ahead. All right. And I think that's pretty much it, dude, with the PPP. I think that answers all the questions, at least that came in. Looks like we're good on that. So we might as well segue right into the EIDL, the Economic Injury Disaster Loans, specifically. Okay, let me tell you what I understand, and then we'll get into questions later after you talk about it. But my understanding is this is basically a loan from the SBA because of the current situation. You are entitled to an emergency amount of $10,000.
Up to $10,000.
Up to $10,000, and if you don't get the loan, you can still take the 10, and there is the ability to have that forgiven. Oh, hold on. One major point. Let's talk about the fact that if someone does the PPP and they utilize it for these expenses we talked about, payroll, even for self, utility, blah, 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 that if you prove over the course of 8 weeks, that's what it was used for, it's 100% forgiven. You go back to your small business, small local banker, as we talked about, and then you apply for a forgiveness of that, and that's what takes place, right?
You have to prove that you spent the PPP loan proceeds to where 75% or more of that money went to payroll.
Got it. Okay.
The remaining 25% can go towards rent,
right,
utilities, interest on a long-term existing debt, things like that.
Got it.
Okay.
Now, how does that contrast, with, if you will, with the EIDL and that 10 grand? So in other words, if that is used for payroll, you can't double dip and say used it for both, right?
Right. In the guidance released by the Treasury a week ago, they showed scenarios where if someone got both, the up to $10,000 grant from the EIDL would get rolled in with the PPP, and that 10 grand would not be forgivable.
It just turns into a loan at that point.
Turns into a loan at that point.
With, by the way, pretty favorable terms.
Pretty favorable terms, but here's the thing. You have to be able to prove that you've had an economic injury disaster. So if you've got a house that you're in the process of flipping and it isn't selling, you don't have anything provable yet. Cool your britches, hang in there. Oh, but Jeff, I'm going to sell the house for $50,000 less. You can't prove that yet. Okay?
Because it didn't
wait until it happens and then go see if you can apply for it. Because the EIDL program goes through the end of this year. And if you're going to do that, make sure you got good numbers of actual, legitimate, provable, verifiable information and data. Okay? Not this, oh, I want my $10,000 grant right now. No, you may not even get that. You only get the $10,000 grant if you qualify for up to that much and if they deny the loan. If they approve the loan, it's getting rolled into your loan proceeds.
In order to be
Brian, you were so right. There's so much wrong information about that out on the internet.
Oh, dude.
People think it's free money. It's not.
It's bad. And that brings up the first logical question then. Should one apply for both? Because a lot of people out there, articles, et cetera, are saying, yes, go for both. What are your thoughts on that? Meaning
I would say, yes, you can go for both if you can prove both. What I'm going to do is I have filed for the PPP because I can use it for payroll. Okay.
Right.
So instead of draining my reserves and draining only my retained earnings and putting me in a compromising situation, I want to go do this. I've definitely lost a crap ton of money by all the canceled speaking gigs. So then I will, in my rental business, a separate business, once I see how devastating that is on my rentals, then I will look at an EIDL over there.
Okay.
But I only will be given the EIDL if I don't qualify for a loan from the SBA. And that means that no one would give me a loan. And I highly doubt I'm in that position when I've got a fleet of free and clear rentals. I'm probably pretty bankable, you know?
But for the real estate agent, if you will, not investor, and they've been selling homes and now they can't show homes anymore, and they're suffering a hardship, or
PPP first.
Mm-hmm.
PPP first. Use that money. Look at unemployment.
Well, if they have the ability
then
to
go look at
they got
unemployment.
50 or 100 grand to sustain themselves, and because with the loan you could do as your business loan whatever you want with it, right? Or is that not recommended?
Yeah, but the strategy I'm giving them is if that commission only real estate agent,
Mm-hmm.
okay, who was banging out great deals, and now everything's come to a halt.
Yep.
They're self-employed. They can prove it. They've got 1099s. They've got their tax return. Go do your PPP loan. Use those proceeds to cover 2 months of your payroll, 2 months of your desk fees, your rents, and so on. Okay.
Yep.
As much as you can that way. Then if your business hasn't started to pick up at all, if houses aren't selling, if showings aren't happening, then go file for unemployment.
Got it. Which is
one of the day that you lay yourself off. And you may lay yourself off June 1 or July 1, whatever, then go file for unemployment and collect up to 26 to 39 weeks of unemployment. And not one dime of that will have to get paid back. Money on an EIDL loan has to be paid back.
Got it. Okay. I want to make sure I didn't miss any because I think that's it with the EIDL. Here's a good one. If you have numerous entities, so let's use me as an example. I have TechLink Solutions, which is my S Corp. I have an LLC for the gel business, the health and wellness. I have an LLC for my real estate. Can you do the PPP for each entity that you own?
No.
Okay.
No. You could probably do it for 2 of your 3 entities.
Okay.
Staffing company, because there's other owners on it besides you.
Right.
And your gel business, because there's definitely payroll there.
Yep.
Okay. Your real estate business, you probably don't have payroll, so no. And then it would be an affiliate issue that they rule against, and you got to report anything other affiliated and so on. So no, don't do that. Okay.
That was actually one that came in quite often. Okay, so I think that covers the PPP and EIDL. Is there anything else you want to say about either of those two before we move on?
No, we're good there. Let's move on. I know we're running out of time already.
We are running out of time. So here's interesting. I want to kind of lump these together. You've mentioned quite a few times unemployment. There's also in the 8 points, there's the emergency paid sick leave, the EPSL, for 2 weeks. There's the Family Medical Leave Act for 10 weeks. What a lot of people have read online, myself included, is that the strategy, in theory, I need your opinion on this, would be to take the PPP, go for the PPP, assuming it's approved, pay yourself your expenses for the 8 weeks. If you have, now this is where it gets confusing. If you have a spouse who's an employee or who you decide to make an employee, as we talked about earlier, she, in theory, can get 2 weeks of paid sick leave, 10 weeks of family medical leave, and then 39 weeks of unemployment, which is 51 weeks or about a year that none of it has to get paid back.
The first 2/3 of that are right. The unemployment is where it breaks down.
Okay, help me out. Help me figure this out.
She's not eligible for unemployment because she wasn't an employee as of the time of February 15th of 2020.
So going back, just doing March on the
wasn't an
payroll.
employee before that, so it breaks down.
What if
your spouse wasn't working?
Okay,
If
prior
your
to 2015.
spouse doesn't have provable income from 2019 into 2020, ain't gonna fly.
Proof of income by 215. Now, let me not challenge you, but based on what we talked about earlier, you don't have to get paid every week, every month. What if you paid someone by the quarter? So if you
Great. Show me the quarterly payments in 2019.
no, meaning what if you put somebody on the payroll, your spouse, January 1st, 2020, you now stroke them a check for that 25 grand we talked about, pay the taxes on it, the W-2. Could you then be eligible for these situations with unemployment?
Possibly, yes, but be prepared to wait for the unemployment. But yeah, possibly, yes.
Okay.
Possibly, yes. Yeah.
And I know that's advanced, but
you're going to have a lot of paperwork to do to get them registered on this, with your state program that you're paying their unemployment and all that stuff. It's a pain in the butt. You're going to have a lot of tax submissions to do, but yeah, you could do it.
Okay. And that leads me to the next question. With the unemployment situation, does one go to the federal $600 a week first, or they first have to go through their state?
You have to start with your state, and then the federal supplements on top of what the state is paying you. Okay. So assume you qualify for unemployment in the eyes of your state unemployment bureau or division or department or whatever you want to call it.
And they do that online, I guess, right?
Yeah, but the systems are broken.
Okay. All right.
Okay. Because they're flat out overwhelmed. Okay.
Right.
And it's a red state, blue state. They all got that issue.
Right.
Once you qualify for unemployment under your state rules, then you can get the additional funding, the $600 a week from the federal government on top of that.
Got it.
But you've got to qualify under your state program first.
Okay.
So for example, if you're a full-time college student and you're just working a part-time gig, be prepared for them to deny your unemployment. Be prepared. They will find out that you're in school and they will deny it. Okay. Why? Because you're a full-time student. You're not committed to working. Because if you'd asked that person back in February, if you got to choose between your job and school, which would you take? And that's a school,
Mm-hmm.
How do I know that's going on? Because they're trying to do that to my daughter right now, who was busting her butt full-time, going to school part-time, and they're screwing with her on it.
She was working full-time, you're saying?
Yes.
Okay.
Yep.
Okay. So I'm just trying to wrap this in my head around this. So again, can someone get employment if they were not on a W-2, if they were a sole proprietor? My understanding is
yes.
You can.
Yes,
right?
they can. They can file for unemployment. This is the first time ever that they would have been eligible to do that, to file for unemployment. They may not get much from the state, but they'll get the $600 a week from the federal on top of it. Okay. So yes, that's why I'm telling you that real estate agent is much better off with a PPP loan. Use that money to pay themselves. If the market doesn't come back in time and they don't have enough showings to say they're back to work, then they can go lay themselves off and rely upon their income for the past year to support their state unemployment and throw $600 a week on top for 26 to 39 weeks from the federal government.
And that obviously doesn't get paid back. Whereas if you took a loan,
none of that gets paid back.
Got it. Now they wouldn't be able to get the other 2 points of the 8, which is the paid sick leave or the family medical leave, because they're not a W-2 employee, correct?
Correct.
Got it. Okay.
Yep. See, I thought about looking at the paid sick leave for me, and then I realized that I would have to be unable to work from home, which is obviously not true because I'm working from home right now, or I would actually have to have the virus and be diagnosed as such by a healthcare professional. Well, I've not gotten sick.
How about this situation, which is very common? And this is actually one of the questions that came in. Let's use my wife, Valeria, as an example, who is a real estate agent. Now the kids are home from school. We found out here in Pennsylvania, they're not opening the rest of the year, which is
I could have told you that not a month ago. I could have told you that 3 weeks ago.
That was done for the year.
That was done for the year across the nation.
Nobody wanted to hear that, man.
But dude, the moment that Secretary of Education DeVos came out and said to all the state agencies, yo, you can waive your end of the year requirements for your testing, The moment that came out, I said, yep, I know. They know school's done for the year.
Yeah. Well,
Okay?
getting back to her as an example, and I think a lot of people are in this exact situation because she's home for that reason. The kids are, quarantined or whatever you want to call it, out of school. Would that then entitle her to that, maybe that paid sick leave or family medical leave back prior to getting on unemployment? They had an extra 10, 12 weeks in there.
Is she an employee of one of your companies? Then yes, you can do that.
Again,
if she's not getting a paycheck from one of your companies, then no, you can't do that. But yes, you could.
Got it. Okay. So if somebody had a small business, a deli, and the wife had to stop working in the store or whatever, what have you, restaurant, to take care of the kids, that would be an example.
Yep, they could get the 10 weeks of paid medical leave to watch the kids, because let's see, this is April 10th. We're recording this. 10 weeks from now is going to put us to the end of June. School's over.
Got it. Okay.
You know?
All right. We have 3 other points and we have about 10 minutes. So let's try and I don't want to leave anything out. Do you have any comments on the stimulus checks? I know my understanding is that if you make more than 100,000 single or 200,000 married, you get nothing. If you make 75 as a single, up to 75 or up to 150 as a married filing joint, you do get your $1,200 per person, husband, and wife. But what do you get if you, let's say, made 175? So you're in between that 150 and 200 as a couple.
There's some calculation online that you get it nibbled down by how much more you make, and I didn't memorize the calculation.
So for a married filing joint, if your total income was between 150 and 200, you get nothing. 150 or less, you get 1,200 per person, and it's kind of phased out in that $50,000 gap in the middle, right?
But there's another phase out that a lot of people aren't aware of.
What's that?
If you are like me and you have not managed to make sure the IRS gets everything that they're owed from a previous tax year, because I had one year that was just absolutely killer, the same year that my wife left, the same year that the divorce began, all that other stuff. I still am paying the IRS. I'm on a payment plan with the IRS. Not been audited. I'm completely legit, folks. Don't think I'm a scuzzbag. I'm on a payment plan with them. Guess what? I don't get my $1,200
because you're on a payment plan.
Because I'm on a payment plan.
What if someone recently just caught up on their filings, Jeff?
Yes. Okay.
Not naming anybody, on this side of the microphone. Thanks to your buddy John Heyer, by the way, recently just got caught up on some prior years after my divorce where I fell behind. And obviously I owe let's just say a large sum myself. I'm not on a program yet because they haven't even contacted me, which I'm surprised about. And
if they haven't determined that you owe money, if they haven't sent you the nasty gram letter going, hey, dude, this is how much you owe,
right,
you might get your check.
No, I got the letter, but I didn't get on a program to pay them back yet.
You're not getting your money. Now your beautiful bride, she may get her $1,200.
What if we did married filing joint? Then she won't get it either.
She won't get it either.
Okay.
Won't get it either. Sorry, dude.
All right.
But it reduces what you owe the IRS.
It's positive. There you go. Okay. All right. Second to
last. Now, dude, I don't care about your questions. Okay.
Okay.
This is the bottom line nugget gold for everybody who hung with us the whole time. Okay. I read this in the CARES Act. I pinched myself. I read it again. I pinched myself. It was still there. So then I talked to my good buddy, John Heyer, and he said, yes, Watson, you're reading it right. So here's my plan. In 2020, I am going to be buying real estate. I'm going to probably make a big purchase. I'm not going to do it solo by myself. I'm going to do it with a group of other trusted guys. We're going to take down a larger package.
Properties or paper?
Properties.
Okay.
Then we're going to do all of the stuff you're supposed to do. We're going to dot the I's and cross the T's. Going to get a cost segregation study. Going to break out the difference between the houses versus the land. And we're going to set up and we're going to do our depreciation as aggressively as legally allowed. I estimate on the transaction we're negotiating in right now that I will probably end up with about $170,000 paper loss to go onto my 2020 tax return.
Okay.
Now, I'm going to do other things besides the coronavirus to keep my 2020 income down, okay? That paper loss can then go back 5 years if I want to. There's not much to clean up in 2015. There's not much to fix in 2016. But by the time that money rolls into 2017, I can then undo all of the damage that the IRS has been beating me up on for a couple of years. And so all of the payments that I've been making on the program and all of the money that they still say I owe can go away. I can probably get a refund with interest, all because I took advantage of, I took action on, I moved forward boldly and bought wisely a big chunk of real estate and took advantage of the legislation and dotted the I's, crossed my T's, used good professional help, go back. That's my dream, my plan.
Okay, so that's actually one of the last things I want to talk to you about, which I was confused on. You know, these filing of amended returns to carry losses back in time, which sounds like that could benefit me as well because I have a tax bill. Other than buying a large pool of real estate, are there any other ways that one could do that?
Buy a huge apartment building.
Okay. Outside of that.
No, you're going to have to buy real estate.
Okay.
You have to buy real estate. That or you've lost a lot of money in the stock market and you're a professional, and you're quote a professional investor. But you see, what I believe
get an EIDL SBA loan to buy real estate. Let's pull it all together now.
You can use a loan to go buy the real estate and then have to deal with paying back that debt over time and be the servant of whoever the lien holder is. Yeah, you can do that to create the tax loss to go beat off the IRS. It's
right.
A game that you got to play. But this group that guys that I'm in, we're not going to be borrowing money from a bank.
Right.
We're going to go take it down. Yeah, there's going to be some private financing in there, but we're going to take this thing down if we're successful in taking it down, and it's going to give me a chance to go back and adjust taxes. So it'll be pretty cool. And if I don't get it done this year, I believe I can do it. I got to double check on this. If I don't get it done this year, I think I can go back and get it done next year too, in 2021. So I got to look to see.
Okay. Jeff, I think that covers everything. And the only other point, it's not even really something to discuss, but if somebody has an existing SBA loan, they can put in for a forbearance. Basically, they won't even they could hold off their payments for a while, which I'm understanding banks are proactively calling their customers, letting them know their payment isn't due. I heard it in some cases.
But here's what you have to be careful about on the forbearance. What does this do to the loan terms? Are you forbearing me for 3 months and now I've got a big chunk due in month 4 where I got to pay for 4 months?
Just to clarify, this applies to a person's personal residence primary mortgage as well.
Yes.
Okay.
This advice applies whether it's an SBA loan, rental property, personal residence. You've got to find out if I ask for this, do I get the money taken and moved to the back end of the loan, or do you expect a big chunk in 4 months? Put it in writing, bank. Let me decide if I want to do it or not.
So for those not from the real estate background and industry, Jeff, what, and I think a lot of people could possibly be setting themselves up for a very nasty surprise in 4 months, is that if the bank gives you what's called a forbearance and they say, okay, you don't have to pay us the next 3 months. You don't have to pay us April, May, and June. And if you were paying $2,500 a month, come July, you're going to owe July plus these 3 months. You're going to have to come up with $10,000. If you don't have that $10,000, which most people won't, you will now go into default. Welcome foreclosure, short sale, the world of hell that we want to stay away from. So that's a forbearance, where a deferral is where they take the money and put it on the end of the loan. So come 4 months from now, you just step back in line like normal. And that's a very important distinction that people need to talk to their lender about, right?
A deferral, a modification, or a recast is different than a forbearance. A forbearance means, hey, just don't pay me, but when it's time to start paying me again, you got to catch up everything. That could hurt you. That could hurt you.
Got it.
Yeah.
All right, my friend, I think this was awesome. It's literally an hour since we started after the Facebook Zoom fiasco. So we have an hour of content, and every single question and bullet point, I believe we covered. Are there any other things that we didn't cover that you'd like to share with everybody that's been with us so far?
This is going to be one of the most exciting times in America to be an entrepreneur. This is a time for you to be bold, be confident, and do business right. If you're not sure how to do business right, please keep track of Brian, keep track of me on social media. We share how to do this stuff because we've been there, done that, bought the t-shirt, paid the bill, stitched up our wounds, and got the scars to prove it.
Speaking of that, you tell us about what's going on tomorrow if people want to plug in. What's going on tomorrow?
If people want to plug in tomorrow I'm interviewing a congressional staffer who works in the financial services regulation part. Her boss, I can't say who her boss is. I can't even say her name. Her boss is a major player on a financial services committee in Congress. And she's been very involved with the implementation of PPP program as it's going through the SBA and Treasury, getting out to the banks.
Okay. How does one attend? Is that a phone call, a conference line, a Zoom?
It's a go-to webinar. Go
Okay.
find me on Facebook, and it's on both Jeff Watson Invested and my personal page, Jeff Watson. My personal page is full up. I got 5,000 friends and 100, 200 waiting. But on my business page, Jeff Watson Invested, you'll find the link to register for that go-to webinar.
And guys, what I'll do is I'm obviously going to distribute this. I'm going to put it on my YouTube channel. I'm going to put it on my Facebook business page, as well as send out an email. So I will include the link if you guys are interested for tomorrow for the webinar for Jeff. So,
all right, man.
Man, thank you for your time, Jeff. It was great as always. Feels like old days, my friend.
Oh yeah,
you'll meet doing webinars.
A lot of fun.
Have a great weekend, man. God bless you. Happy Easter, and guys, thanks for tuning in. And hopefully this was helpful. And we'll talk to you soon.
Hey, Brian.
Yep.
Today's Friday. Sunday's coming.
It is, brother. It certainly is.
All right, man.
Guys. See you, Jeff.
Peace.